You might remember from my last Watch This Wednesday video I said I was going to do something incredibly risky. Well, now seeing how that's played off for me, I decided I'm going to switch back to my original strategy and stick with investments that I feel should be a little bit on the safer side. Now, assuming you've already seen the title, thumbnail, and all that good stuff, I'm sure this will come as no surprise that the company we're looking at today is CVS. Hey everyone, thanks for joining me today. My name is Matt, and before we get started here, as always, I just need to say, this is not financial advice, so please don't take this as financial advice. If you do need advice, please go speak to a financial advisor. This is just for your entertainment purposes only, so do not make any investment decisions based solely on what you hear. With that out of the way, and per usual, I am sure that many of you are familiar with CVS, but in case you're not, CVS is a retail pharmacy. They currently have over 9,900 or 9,900 locations and have been around since 1963. Now, I actually have a few fun facts here about CVS, but we'll keep this short. So the original name, or what CVS stands for, is Consumer Value Stores. As of 2019, around 70% of Americans live within 3 miles of a CVS, so they are everywhere and pretty accessible to most people in the US. And CVS is that company that is notorious for having the world's longest receipt. These receipts that you get when you shop at CVS are so long, people have decided to make fun of it a little bit and have even created clothing items that resemble the CVS receipt, such as scarves and ties. As you guys know, I am trying to make these videos a little bit more clear and concise, so without any further ado, let's go ahead and jump right into these numbers. Now, we are doing a comparison this week, and we're going to compare it to, probably comes as no surprise, Walgreens. And before we jump into these numbers, I'd also like to mention that, of course, we could be comparing CVS to healthcare companies, but I really do feel that comparing CVS to Walgreens is a better lined up comparison, so that's why I'm choosing Walgreens as opposed to other publicly traded healthcare companies. To start off though, we have the PE ratio. Worth mentioning that this is just the regular GAAP measurement 12 trailing months for the PE ratio. Again, I'll explain all that in a different video, but as we can see here, CVS has a PE ratio of 12.45 compared to Walgreens, trading at a very nice 79.38 times earnings. Now, it's worth mentioning, I believe the industry average for pharmacies and healthcare is around 25.6 or 26.5 times earnings. So obviously, as we could see here, CVS might look like it's trading at a little bit of a discount where Walgreens could be at an incredibly high premium right now. So obviously that's something that I like to take into consideration, especially when I'm looking for growth in investments. Neither of these stocks though are really that volatile, and I think that's something we should expect given the industries that they're in. But we could see CVS with a beta of 0.79 compared to Walgreens, which is at 0.52. One of the reasons why I tend to favor CVS more than Walgreens, though, does have to do with the revenue growth, because as we could see, 9.02% compared to 1.95% is a pretty big difference. Also, given that CVS has been in business for, what would that be, like 57, 58 years, give or take, that is incredible to see that they could still grow revenue around 9% year over year. Also worth mentioning that CVS does have a much higher return on equity. We have the 12.06% compared to Walgreens at 1.97%. So the numbers here really are favoring CVS, at least from what I'm seeing. Now, you might be able to argue that Walgreens might look like a more attractive investment, given that they have a higher dividend payout ratio, especially if you are an income-producing investor. So Walgreens, you have the 38.85% for the payout ratio compared to CVS's, which is 26.91%. Part of the reason why I am choosing CVS over Walgreens, though, is because I am looking for more growth in this portfolio than dividends. And also, I mentioned this kind of earlier in the year, well, I guess earlier last year, maybe around, May of 2020, that I was not a fan of Walgreens having to fire employees, shut down stores basically, but they were still trying to maintain that dividend aristocrat title and were still increasing their dividend. Personally, I believe that having a better functioning operation is a better approach than just trying to always increase that dividend for the investors. I think in the long run, it's going to pay off if you don't always just focus on the dividend, but I'm aware of how hard it is to maintain that dividend aristocrat title. So, to each their own, but that's just a statistic that took me off a little bit. Now, one of the things, though, that you might notice is that neither of these really have a very impressive quick ratio. As we can see, CVS is sitting at 0.58 compared to Walgreens, who's at 0.28. So these are both fairly low, especially considering the quick ratios of most of the companies that I've previously invested in. I think it's worth noting, though, that these companies do both have the retail presence as well. So where you go in and buy like your snacks, drinks, Band-Aids, whatever. And as I've mentioned many times in the past, retail tends to have very thin margins and they don't operate on the largest profits. So I wasn't totally surprised, nor was I taken back to see that these both have these lower quick ratios. And ultimately, I think when you invest in retail, this is a theme that you'll see across many companies. It is why I tend to stay away from grocery store investments like Kroger, but CVS has that pharmacy aspect to it, which makes me feel a little bit more comfortable investing in this company. Also, I would like to point out that if you do a discounted cash flow analysis, specifically using the two-stage free cash flow to equity analysis, you will see, and as Simply Wall Street shows us here, you will see that CVS is actually undervalued right now by around 50%, meaning that according to cash flow circumstances, this company has a lot of room to grow. So that's something I always like to see, especially as more of a value investor, as boring as that can be, because I like having companies that have a very good reputation and might be able to give us a little bit of a growth opportunity, because that's not something, especially in this market, that we come across all that often. And now I would like to talk about what I do like about CVS, and there's really just a few things here. So the first thing that I like about CVS is that they actually have around 3 main sources of revenue for themselves. The first one being healthcare, which comes from their fairly recent acquisition of Aetna. Then they also have their pharmacy services, which is actually the largest portion of where they get their revenue from. So this is where your prescriptions get filled and speaking with the pharmacist. And lastly, and not surprisingly, their smallest form of revenue, or their smallest portion of revenue generation, comes from their retail side. Another thing that I like about CVS is that they are a pretty innovative company. You might have heard about their partnership with UPS, where they are working together to do a drone delivery of prescription medication, which I think is a really cool idea. Will it work? I don't really know, but I like that they're thinking in that kind of front of, what opportunities do we have to be innovative in an industry that's as old as time? So that's something that gets me excited with this company. Also, I don't know if you want to throw this under the innovation category or just crazy idea category, but they were talking about trying to put Beyond Meat into their stores. Now, CVS is not a place I go to for meat at all, and I know Beyond Meat's a meat alternative. I thought that was a strange idea, and I guess I'm just going to leave it there, because take your own thoughts with if you think CVS should be having Beyond Meat in their stores, or if that's just a waste of shelf space. The last thing that I really like about CVS, and what I think really makes this an attractive investment, is Aetna Connect. Now, Aetna Connect is just a very small sample size right now. I think they're testing it out in like Kansas City or somewhere in Kansas. And basically, it's their take on an affordable healthcare option. So it is something run through Aetna, run through the CVS stores, and helps people get cheaper access to things like their prescription medications or maybe general care, so like a general checkup process, which again is something I like, and part of the reason why I want to add this to my portfolio, because similarly to, as I was saying with Smile Direct Club and with what Teladoc is doing and GoodRx, I think that there's a huge change coming to the medical industry, and one that is going to allow the consumer to have cheaper options towards traditional medicine practices. And I think CVS is doing a good job of being in the middle of both sides of that, of saying we want to be part of this affordable online contactless portion of it, but we understand that it's going to take time, so we're still keeping our roots in that traditional either drive-through, pickup location kind of thing, and running through your regular insurance. So I think CVS is really positioning themselves well to be adaptable towards what changes might be coming towards medical practice. Now, I did listen to the earnings call, and admittedly, it was kind of boring, because you don't really expect for there to be much exciting news with companies like CVS or even Walgreens for that matter. But one thing that did come up very frequently, and basically the majority of the earnings call, is that their CEO is stepping down. Now, their CEO has been with CVS for 40 years and has been CEO for over a decade now, so that could be viewed as a threat to this company. But I do like the replacement for CEO. The replacement is going to be Karen Lynch, who is currently the president of Aetna. So it seems to me like CVS is going to put a large emphasis on this healthcare side of their business, or that insurance side of the insurance side of it. And I think that could actually be a huge driver of growth for this company in the future. So having somebody come basically from already inside CVS to taking over the company and then leading it to where the company needs to be going, I think is a very smart decision. And I'm personally excited to see what Karen can do for CVS. And in case you're wondering too, the current CEO will be stepping out sometime mid-February, and that's when Karen will take over as CEO. Now, another threat though, I'm sure that you might be thinking of when it comes to CVS is Amazon. As we've all heard in the news recently, Amazon is starting to dip their toes into a pharmacy service. But again, I think with CVS's innovations, with what they're doing, again, with things like drone delivery or even prescription drop off from just regular people dropping it off, I think that they're going to hold up well against this fight with Amazon. Part of that also being with CVS's Minute Clinic or even like the COVID testing sites that they have, which they've actually done over 6 million COVID tests already. I think that CVS really shouldn't be too fazed by Amazon. Sure, there's going to be the whole initial factor that might take away from some of their business, but in the long run, pharmacies are essentially an area where it really helps to have a place where you can just go to and get what you need. I know if you're sick, you're not really wanting to get into your car and drive away and all that good stuff, but being able to access simple medications like Tylenol, ibuprofen, Tums, whatever, is something that's going to be still very important as time goes on, and we're not always going to have the time to wait for Amazon to drop that off to us 2 days from now when we can just drive 3 miles or less up the road and pick that up ourselves and have it within an hour. So I don't actually see Amazon being too big of a threat towards CVS. Again, just given the ways that they're innovating their company and positioning themselves to really be a strong player in the future of pharmacies and medication. So with all of that said, I'm going to go ahead and add CVS to the portfolio. So let me go ahead and do that real quick, and I'll be right back with you. All right, so I was a little hesitant to show the portfolio this week, just given how bad Fubo TV has done for us. So let me get that out of the way and just say, yeah, it's down almost $3,000. I have no idea why, but I'm scared about that one. But anyway, back to CVS. So I bought around 50 shares of CVS, and it's given us around a $37 gain, give or take. And the reason why I only bought 50 shares as opposed to like 75 to really bring us to that $5,000 investment is because of the CEO change. Usually when there is a change in CEOs, 9 times out of 10, the stock does take a little bit of a hit. It doesn't happen all the time, but for that reason alone, I wanted to keep a little cash on the sideline for this investment just to see if maybe we'll have a better buying opportunity in the future. I feel that giving us this this 50 share exposure gives us enough exposure to where if that doesn't happen, I'm not going to lose sleep at night, but still leaves enough cash on the sidelines for us to dabble with if there's a better buying opportunity within the next 2 months. So that's why I only bought 50 shares, and it is a little bit smaller, as you can see, from a market value compared to the other positions we have. But one that I feel is going to be exciting to this portfolio, and actually a stock that I've been wanting to do for a while, but I've thought there's been better opportunities in the past, which is why it's taken me so long to get to this stock. As we could see though, so Fubo, we'll just ignore that. iHack is up around $123 and Zscaler around $118. Then we have a nice 3 losers in a row here with BlackBerry, Comcast, and Smile Direct Club. I don't really have much to say about that. I am surprised BlackBerry is down so much, but I guess that's what happens when you buy 500 shares of one stock, so probably a mistake on my end. Finally, some good news though. Pinterest is up around $317, which actually that's not the best news. That's down from last week by around $200, I believe. So not totally happy with that. DR Horton also down. Jeez. I missed like one Watchlist Wednesday, and all of a sudden the portfolio just tanks. So I guess that's my penalty for missing a Watchlist Wednesday for once. But then we have these last positions in here that are still keeping our portfolio in the green. Not by much, but still doing the best of their abilities. We have Etsy up around $1,500, ArcQ up just shy of $1,400, and we still have ChargePoint up just shy of $3,500. So at least those 3 and now CVS are keeping this portfolio afloat. Now, I do believe in the future we are probably going to expect a little bit more volatility in the markets as we have a presidential change and still with a lot of uncertainty looking forward into what our future holds. So I don't expect this portfolio to just be up and up and up constantly. And I am expecting more and more volatility, at least within the first quarter of 2021. And I'd love to know your thoughts on that as well. Is this something that you're planning for, or are you making any adjustments to your portfolio to help keep peace of mind during times of volatility? If you are, leave a comment below. I'd love to hear what your strategy is right now. So with all that said, though, my microphone is acting really weird. It keeps doing this like buzzing noise. So you might have seen my computer move around just because of me messing around with it. So I'm going to wrap up here. If you like this video, I hope that you hit it with the like button thing, making it blue, kind of fun stuff. It's a good hobby to have. And if you want to subscribe to this channel, go ahead and subscribe. I'm really just so bad at asking, so if you guys don't mind doing it, eventually I'll stop asking. But for right now, I think some of you might still need that friendly reminder to subscribe, like, comment, all that good stuff. Tell your friends, all that. All right, I'm done here before my microphone messes up again, so thank you so much for taking the time every day to watch this video. You could be anywhere in the world, and you're right here with me, and I really appreciate that. But I'm going to let you go ahead, enjoy the rest of your day, and I will see you next time.